Want to adjust your investment mix to match your risk tolerance or goals? If rebalancing your portfolio seems complex, you're not alone. Today, we're changing your asset allocation in your Fidelity account. Welcome back to Guide with Samuel. Let's break it down. Asset allocation is how you divide your investments among different asset classes like stocks, bonds, and cash. Rebalancing brings your portfolio back to your target mix. Step 1. Analyze your current allocation. In your Fidelity account, go to Planning and Advice, and then Portfolio Analysis. This tool shows you a pie chart of your current stock, bond, cash allocation. Step 2. Make trades to rebalance. If you're overweight in stocks, you might sell some stock funds and buy bond funds. If you're adding new money, you can direct it to the underweighted asset classes to rebalance without selling. And that leads to my crucial pro tip: use new contributions to rebalance, not just sales. Whenever you add new money to your account, invest it in the asset classes that are below your target percentage. This is a tax-efficient way to rebalance because you avoid triggering capital gains taxes from selling. So, just like that, you can keep your portfolio aligned with your risk tolerance and goals. Regular rebalancing goes a long way in managing risk and staying on track. Now I'm curious, what's your target stock bond allocation? 80/20ths, 60/40ths, or something else? Let me know your thoughts down in the comments, and subscribe for more clear-cut guides like this one. Thanks for watching. I'm Samuel, and I'll see you in the next video.